Imagine paying hundreds of thousands, maybe even millions of dollars every single year for a product you just pray to whatever higher power you believe in that you never actually have to use.
Yeah, it's a completely wild concept when you really think about it.
Right. I mean, that is the staggering reality of business insurance. For most founders and executives listening to this, it is just this massive sunk cost.
Oh, absolutely. A totally passive expense.
Exactly. It's like this painfully boring line item on a P&L statement that only ever brings bad news, either in the form of rising premiums or denied claims. But today, we're throwing that entire paradigm completely out the window.
We really are. I'm excited for this one.
Me too. So we're looking at a radical framework proposed by the Magoon Group. We're pulling from their manifesto and a fascinating deep dive they did titled, "We're not an insurance agency, we're a growth partner."
And the mission here today is to look at how they attempt to take that massive passive expense and turn it into the actual engine that scales your company.
Yes, and just to be clear for you listening, this deep dive is not about premium rates or policy jargon. We're not doing that today.
No, thankfully. I think we'd all fall asleep.
Totally.
Yeah.
This is about a radical shift in business strategy. We're exploring how transforming a transactional vendor relationship into a strategic partnership can actually accelerate business growth.
Right. It's about creating long-term enterprise value. It is a complete inversion of how business-to-business services typically operate.
Okay, let's unpack this, because to truly grasp the sheer scale of the shift this framework is proposing, we have to start by diagnosing the disease. And the traditional insurance industry is, well, it's operating on a fundamentally broken model.
It is, and not because of malice or anything, but because the entire ecosystem is just built around a passive transaction.
Yeah, as we were diving into this source material, I just couldn't shake this one specific image. Traditional business insurance feels exactly like one of those bright red fire extinguishers sitting in a glass case in the hallway of an office building.
Oh, that is a perfect analogy.
All right, like you pay a premium for it, you bolt it to the wall, and then you completely ignore it. The only time you ever interact with it, the only time you ever actually break the glass, is if the building is actively engulfed in flames.
Exactly. But honestly, I can hear people pushing back on that right now.
Oh, for sure. They'd say, but wait, isn't that exactly what insurance is supposed to be? Just a passive safety net.
And that passive mindset is precisely where the industry traps its clients. The baseline standard for an agency today is what anyone would classify as just basic administrative maintenance.
Right, like pushing paper around.
Yeah, they do good work, sure. They process the annual renewals, they answer the occasional email about a certificate of liability, and they act as a conduit when a claim is inevitably filed.
Which is fine, but it's just expected, right? Like that's the bare minimum.
Exactly, it's table stakes. But the Magoon Group framework poses a question that completely dismantles that baseline. They ask, what is your broker doing for your business the other 364 days of the year?
Wow. The other 364 days. I mean, if you only speak to your broker when the invoice is due or when the building is literally on fire, you are basically driving completely blind.
You really are.
It's like you're driving a Formula One car and your insurance broker is just the tow truck driver waiting for you to crash, instead of the pit crew actively monitoring the telemetry, to prevent the engine from blowing in the first place.
What's fascinating here is the underlying psychological misalignment between the broker and the business owner. Founders do not wake up in the morning burning with a desire to review their general liability limit.
I certainly do.
Right. Insurance is a negative utility product. Nobody buys it because it sparks joy. They buy it because they legally or contractually have to.
Yeah, it's a chore. It's defense, not offense.
Exactly. But the actual desires of a business owner, the things they actually care about, are highly complex and growth-oriented.
Right. They want to grow revenue, win larger contracts, hire employees.
Yes. They want to double their market share, acquire a competitor, retain top-tier talent, and eventually they want to exit the business or pass it down to the next generation with maximum enterprise value.
So the insurance isn't the goal. It's just a tool to achieve the goal.
Precisely. They are trying to build something resilient, but if the broker is only interacting with them once a year to tweet a deductible, that broker is totally isolated from those massive strategic goals.
They're selling a piece of paper, completely oblivious to the fact that the client is trying to build an empire.
And if the broker is disconnected from that overarching vision, the risk management strategy isn't just passive, it's actively hindering growth.
Oh, interesting. How so?
Well, a misaligned policy ties up risk capital that could be deployed for expansion. It leaves huge blind spots if you're entering new markets.
Hmm.
When a vendor relationship is just an annual transaction, they have zero skin in the game regarding your actual long-term success.
They're just managing a commodity.
Exactly.
Here's where it gets really interesting, because if the true goal is business growth rather than just having a policy, the conversation between a broker and a business owner has to fundamentally change.
It has to be a completely different dialogue.
Right. We are talking about pulling the insurance advisor out of the emergency room where they're just doing post-disaster triage and moving them into the boardroom. But how does a broker actually operate proactively before a disaster strikes? Like, what does that practically look like?
It all comes down to the stark difference in the types of questions being asked. A traditional broker asks things like, what did your premium do last year? Or, what deductible would you like on this renewal?
Just totally reactive historical stuff.
Yeah, looking in the rearview mirror. But a proactive partner, like what the Magoon Group is doing, asks entirely different questions. They're asking, are you opening a new location in a different state next month?
Right.
They're asking, are you adding 50 new employees? Are you preparing for outside investment? Are you thinking about succession planning?
So they're looking at the strategic roadmap to clear the obstacles of the future.
Exactly. The source material argues that insurance must be part of the everyday operating strategy. It shouldn't just be a safety net. It should actually help a business qualify for larger contracts or protect their cash flow.
So give me some concrete examples from the text. What does this proactive work actually look like in the weeds?
Well, rather than just insuring against a lawsuit, a proactive partner is actually reviewing your vendor contracts before you sign them.
Wait, really? The insurance broker is reading the contracts.
Yes, they are specifically targeting the indemnification clauses to ensure you aren't contractually absorbing liabilities that belong to a third party.
That is a phenomenal distinction. You aren't just paying out a claim because a bad contract led to a lawsuit. You are preventing the bad contract from ever being executed in the first place.
Right, you are acting as a strategic shield, and it extends to every operational facet. Think about cybersecurity, for example.
Oh, that's a huge one right now.
Huge. A passive broker sells you a cyber liability policy and literally just waits for your servers to get held hostage by ransomware.
Yeah, and then they help you pay the ransom.
Exactly. But a growth partner evaluates the cyber risks before an attack. They might conduct a penetration test on your network infrastructure or audit your employee phishing protocols beforehand.
Because a data breach doesn't just trigger an insurance claim. I mean, it destroys customer trust, it stalls your operations, it completely decimates your cash flow.
Precisely. By preventing the breach, they are directly protecting the company's EBITDA. They are also looking at AI opportunities and identifying operational inefficiencies.
So it's not just about compliance, it's about enabling aggressive moves.
Yeah.
If you have your risk profile that tightly dialed in, you can bid on those larger government contracts, you can negotiate better terms with suppliers. But wait, I have to stop you there.
Uh-oh, what is it?
I am seeing a massive structural contradiction in how this is actually executed based on what we read.
Let's hear it.
Okay, so you're painting this picture of a deeply intimate, highly customized boardroom relationship, right? It's human-centric. It requires this deep understanding of a founder's specific vision.
Right, very relational.
But at the same time, the Magoon Group is heavily advocating for the implementation of artificial intelligence and advanced automation. I mean, if this whole philosophy is about personal human relationships, isn't relying on AI completely contradictory?
That is a very common reaction.
Doesn't introducing technology kill the personal touch? I mean, farming out risk analysis to an algorithm feels like replacing a firm handshake with a line of code. If you've ever ended up in an endless loop with an AI customer support chatbot, you know it usually destroys trust.
It is a totally valid concern, and it's honestly the exact reason why so many legacy B2B industries resist modernization. They conflate automation with alienation.
Right. They think tech means cold and robotic.
Exactly. But the text counters this by arguing that AI will not replace advisors. Instead, it actually makes them better. It acts as an exoskeleton for them.
Okay, I'm listening. How does that work?
If we connect this to the bigger picture, you really have to look at the sheer weight of operational complexity that hits a business as it scales. growth creates massive complexity.
Right, you get more employees, more vendors, more compliance hurdles. If you're a logistics company, you don't just have 5 trucks anymore. You have a fleet of 500 crossing state lines.
Exactly that level of complexity. The landscape mutates daily. A policy that worked perfectly for your company 3 years ago is dangerously obsolete today.
Yeah, that makes sense.
Human beings, no matter how dedicated they are, simply cannot manually process that volume of variable data fast enough to actually be proactive. This is where the Magoon Group deploys technology.
What exactly is the AI doing?
They use AI and natural language processing to instantly parse through thousands of pages of certificates of insurance from subcontractors. It analyzes information faster and identifies trends.
Oh, wow. So it's flagging things like missing limits in seconds, which would take a human days to read through.
Exactly. They use predictive analytics on fleet telematics to identify which routes or drivers pose the highest risk of accidents before a crash even happens. It automates all those repetitive tasks.
Okay, so the AI is doing the heavy lifting on the data ingestion. It's handling the relentless, tedious processing that usually bogs down an agency's staff. But how does that help the human element?
This creates what we can call the automation paradox. By rigorously automating the busy work, the technology actually strengthens the trust and deepens the human relationship.
Wait, really? By using a machine?
Yes. When an advisor is no longer spending 40 hours a week manually keying data into spreadsheets or tracking down renewal forms, what do they do with that newly reclaimed time?
I mean, ideally, they talk to the client.
Exactly. They spend it doing the one thing an algorithm is fundamentally incapable of doing, building empathy. They spend it sitting face-to-face with the founder, focusing on understanding the client's unique destination.
Oh, I see. Because every client's destination is wildly different.
Totally. You might have one client whose singular obsession is to aggressively double their revenue in 3 years to prep for a private equity buyout.
Right.
But right next door, you could have a second client who just wants to stabilize margins, minimize their stress, and quietly pass the company down to the next generation.
And you cannot apply a one-size-fits-all automated sequence to those two diametrically opposed human desires.
Exactly. The technology buys the advisor the time to understand those desires, and the data insights provide the leverage to execute them safely.
So what does this all mean? We've dismantled the passive fire extinguisher model. We've established that true risk management belongs in the boardroom, proactively reviewing contracts and cyber protocols.
Right.
And we've reconciled the use of AI as a tool to carve out more bandwidth for that deep strategic human connection. But as I look at the specific service offerings the Magoon Group mentions in the text to fill that bandwidth, I have to push back one more time.
Okay, bring it on. Where are they overstepping?
I buy the risk management. I completely understand the operational consulting and the contract reviews. That directly correlates to preventing claims. But the manifesto explicitly states that they combine this with branding and marketing strategy.
Yes, they do.
How on earth does an insurance advisor justify stepping into a client's marketing department? I mean, recommending liability limits is one thing, but advising on brand positioning, that seems like massive scope creep for someone whose core product is insurance.
At first glance, it absolutely sounds like a massive overreach. But it actually addresses a deeply human element of running a company that the source material highlights, the profound isolation of leadership.
Isolation. What does that have to do with marketing?
Well, business owners carry enormous isolating responsibilities. They are single-handedly responsible for the livelihoods of their employees, their families, and their communities.
It is incredibly lonely at the top. You're carrying all that weight, and usually when your phone rings, it's just a vendor asking to be paid or pitching you a new software.
Precisely. A founder doesn't need another salesperson pitching quotes. They need a partner deeply invested in their success. And to be a holistic growth partner, you have to acknowledge that risk management cannot exist in a vacuum.
Okay, I follow that. Everything is interconnected.
Exactly. So let's look at the mechanics of why an insurance advisor would care about your brand. What happens if a company has weak market positioning and confusing branding?
Well, their customer acquisition cost goes up. It becomes way harder to win new business, and they eventually have to compete solely on price.
And when you compete solely on price, you lose your pricing power. When you lose pricing power, your profit margins compress. What is the very first thing a company does when margins compress and cash flow gets tight?
They start cutting overhead, they delay equipment maintenance, they freeze hiring, which obviously overworks their current staff.
Exactly, they cut corners. And overworked staff and deferred maintenance directly and exponentially increase the likelihood of a catastrophic liability claim.
Oh, wow. So like a workplace injury or a blown delivery timeline leading to a breach of contract?
Right. A compromised safety protocol because people are rushing. Therefore, weak branding is, in fact, a massive operational risk.
That's a fascinating way to connect those dots.
Conversely, a strong brand creates a moat. It gives you pricing power, which creates robust cash reserves, which allows you to invest heavily in safety, talent, and innovation.
So true partnership means sharing new ideas and offering strategic guidance across the entire operational board, including marketing, because all of these elements eventually impact business risk and profitability.
Exactly. They are operating as a literal extension of your executive team, and that completely transforms the metric of success.
How so?
The Magoon Group doesn't measure success by the number of policies written. They measure it by the number of businesses they help become stronger. Their philosophy is that when our clients grow, we grow too.
That is the defining difference between a transaction and a transformation. When someone's success is tied to your success, the power dynamic totally shifts. They are no longer selling to you, they are building with you.
It's a complete alignment of incentives.
And for you listening right now, whether you run a massive logistics company or you're just navigating your own professional career, this framework really forces you to evaluate the people you do business with.
It really does. You have to look at your ecosystem.
Exactly. Look at the vendors, the consultants, the advisors in your own life. Are those relationships purely transactional? Do they just pop up once a year for a renewal? Or are they transformational growth partners?
This raises an important question, and it's something not explicitly covered in the text, but it's the natural conclusion to all of this.
Let's hear it.
If every single external vendor a business relied upon, the corporate accountant, the legal counsel, the software provider, the marketing agency, and the insurance broker, if every one of them abandoned their highly siloed behaviors and adopted this exact growth partner mindset,
Wow. Yeah.
how would that fundamentally alter the velocity at which a business could scale? What if the highly fragmented, disconnected nature of traditional B2B services was actually the biggest hidden risk to a company's survival?
That is a phenomenal point to walk away with. Imagine the sheer momentum of a boardroom where every external advisor isn't just protecting their own turf, but is actively pulling in the exact same direction to build your enterprise value.
It would be unstoppable.
So the next time you walk past that dusty fire extinguisher in the hallway, or the next time you get a generic automated renewal notice in your inbox, realize that you are paying for the privilege of being ignored. Demand a little more for the people you do business with. Demand a partner. Thanks for joining us on this deep dive.